The main reason that I was able to get funded over 5 million with several different prop firms is because I understand the difference between pullbacks and true reversals. Okay. This is one of the most common mistakes that I see ICT traders making, whether you're beginner, intermediate, or have been trading it for a few years. You are trying to catch a falling knife. So, anytime the market's, if we're in a clear uptrend, when the market is pushing back up, you'll try and catch the reversal back to the upside. So like here, here, and here. Now, in this scenario, it's obviously you probably wouldn't long any of those, but down here, you definitely would take this position, or most ICT traders would take this position. Well, if you were trading the PO3 or a time-based model, you would not have taken this entry and would have actually been able to bottom tick this with me. So we're going to be going over exactly how to understand the differences between a pullback and a reversal and how to trade a true reversal PO3 model with me here today. Okay, so this was a 17R. I actually did take this live in my Discord, and this stop loss is not exaggerated, by the way. I think my fill was actually about 20 ticks. Yeah, I had a limit for 20 ticks. So just about a 20R would have been able to have been secured. Just for the proof. Again, I literally live trade this in real time every single day with hundreds of people in my Discord. So if you do want to go and do that for completely free, that is, it's going to be the first link down below. You can watch me do that. So as you can see, here's the screenshot of my fill. No, I'm not live trading on my phone. I just sent the screenshot in on my phone. But yeah, plus 381 ticks, literally the bottom tick, right? You can't get more precise than that. Now, why did I actually wait for that? So we're actually going to take a look at that here right now. Now, I literally traded this exact reversal model 3 times this week and came out with 12K across all of my accounts in top set payouts. So it's very effective. I've been trading it for a very long time. If you know PO3, it does involve the PO3. Okay, so first, let's go over why this first potential entry would have been bad and why most ICT traders would probably take it. Okay, so first we're going to go on to the higher time frames. So we can clearly see that we're, trending all-time highs, right? Bias is assumed bullish for this entry. So we have a daily fair value gap. This is an IRL to ERL play, right? We tap into daily IRL. We're going to go back to ERL, which obviously we ended up hitting at the end of the week. So clear high time frame play. If you know IRL to ERL at all, like a good amount of ICT traders do, then that would have been clear for you to spot. So on the lower time frame, we're patient, right? Okay, so market has opened right here, and you're waiting for price to go and dip into that daily gap, right? What do? We tap into the daily fair value gap, okay? Now, what are 99% of ICT traders looking for? Boom, an inversion fair value gap, okay? So right here, that most recent fair value gap, we inverse. So most people are going to want to go long here, stop loss either here or at the wick, and they might target the opening price of this candle or maybe this high right here. But not really a great risk reward, but overall they're trying to trade a reversal. Now what happens? Instantly stopped out, right? What happens right after you get stopped out? It actually plays out, okay? Now why is that? Why is there this extra sweep, okay? And I guarantee a lot of you have been asking yourself this question when you're trading a reversal model. Why is there always like this one extra sweep? I was right. I had the right daily PD array price was going to bounce off. My bias was exactly correct. My entry point was almost correct, but it was off by a couple of ticks. It's because you're not trading a time-based model, okay? So we're going to dive into exactly how to trade a reversal model time-based with a higher time frame candle. Before we dive into the model, if you are interested in completely mastering the exact way that I trade and you want to replicate the same way that I make 5 figures a month with prop firms through one-on-one lifetime mentorship with me, you can go ahead and click the second link down below. I've opened up a couple more spots. If you're not serious and not willing to invest in yourself, then don't click the link. But if you are, and you are serious about taking trading full-time with prop firms, then go ahead and do so. This is just one example from this month. Dobrin requesting his literal very first payout, trading purely the PO3 right after starting to work with me after being unprofitable for years. So if you are interested in applying, then go ahead and do that down below. But let's dive into the entry model. Okay, so you might see this high time frame candle right beside the low time frame, and you're probably curious about it. So if you don't know, you can just look up a high time frame indicator. This 2 degrees one is completely free. But basically, you want to set that to the 4-hour time frame. Now, what happens with these candlesticks is when they open, they will tend to want to make a bottom or a top wick before continuing, okay? That is called the open, low, high, close. So the first thing we do, step 1, is the candlestick opens, okay? If we're assuming a bullish bias, then the second thing that will happen is a candlestick will make its low or its bottom wick, okay? Now, it makes its low and its bottom wick by manipulating out some form of liquidity, okay? Whether that's just sweeping a quick little low or high or tapping into a 15-minute hourly fair value gap, it wants to grab a little bit of liquidity and make a true low, like an actual, like somewhat significant wick before continuing higher. So we want to obviously wait for a new 4-hour candle to open, which is 10 a.m. Eastern, and then wait for a bottom wick to be put in, which is going to be our manipulation. Now, what this obviously looks like on a low time frame is a power of 3. So we see a little bit of consolidation or accumulation, a manipulation to grab liquidity, and distribution, which we want to participate in, okay? So now that we know what that looks like, basically all we're gonna do is wait for this new 4-hour candle to open, okay? And it doesn't always happen the second it opens. If you have news at 10 a.m., it can. Sometimes you may have to wait. Now, this is an example of a reversal model. You know, a good amount of the time we're trading a continuation model where price is already up here. We accumulate, manipulate, and distribute. We put in the low of the 4-hour there and continue higher. But this is called a smart money reversal within the buy model. But essentially, when you're trading reversals, usually you want to wait for an extra sweep and for 10 a.m. for that new 4-hour candle to open and put in a true low, okay? So that's exactly what we see. Obviously, I've been trading this model for 5 years, so I know what it looks like. I'm able to bottom tick these. And in additional confluence, we also had an SMT at the lows. So that was the reason I bottom ticked. But if you didn't want to bottom tick, you could have easily just waited for one of our entry confirmations, a change in state of delivery, an inversion fair value gap, like down here, as you can see. Let's close that out real quick. As you can see down here, you could have just taken a CISD. Boom, right there. CISD, stop at the low of the 4-hour candle, and next thing you know, you're catching the move. So instead of being like the 99% and just taking whatever the first inversion fair value gap is and getting stopped out, you're thinking like the actual 1%, and the 1% is profitable, takes payouts, trades a time-based model. So this was a bit of a quicker YouTube video, but I just wanted to display the importance of trading a time-based model and really what you need to look for when trading true reversals. And that is always waiting for a higher time frame candle to open for me. Okay, this has literally happened 3 times this week. All 3 times it's happened, we've caught the trade live and it's played out significantly and we've caught the rewards for it. So yeah, this is if you are trading a smart money reversal within the market maker model. If you haven't learned about market maker models yet, I highly recommend you go and watch this video right here. It's going to help clear all of that up for you. Understand when you need to be thinking about trading reversals, when you need to be thinking about trading continuations, where your draws on liquidity are. It's literally how the entire market moves. So that video is right there. If you want to go and watch it, I highly recommend it. And as always, Apex right now is 90% off. That's the 3rd link in my bio. If you use code LOCKED, 90% off any account size. I believe it's 80% off for reoccurring and 1 day to pass. So if you want to use this strategy to stack a shitload of allocation, Apex is the best place to do it right now. I hope you guys got a lot of value out of this video, and I'll see you in the next one.